Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Upexi Inc. and I promise you it's going to be more exciting than watching paint dry. Well, maybe not, but we'll try our best. I'm kidding of course, because what we will discover is how the sausage is made in the stock market and the results might surprise you. We're going to look at Upexi's recent financial results and see if they're swimming or sinking. So let's get started. But before we get started with that, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. This is an 8K filing, which is basically a company shouting, hey, something important happened. To the Securities and Exchange Commission and all of us, the date on this report is May 16, 2025. So it's fairly recent. The main event is the announcement of their financial results and general business status for the quarter that ended in March of 2025. It looks like they released a press release, which is a public statement meant to give investors a quick snapshot of how things are going. We have a copy of that press release attached, so let's dive into that because that's where the meat of the story is. Alright, this press release headline tells us straight away what we're looking at, the financial results for the first quarter of 2025. Here's a big number. Gross revenue increased a huge 134% compared to last year, reaching $27.1 million. That sounds really impressive, like they more than doubled their sales in just 1 year. The report mentions that this increase is mostly from acquisition synergies. So it sounds like they bought some other companies and their revenues are now being added to Upexi's total. While growth through acquisitions can be good, it's really important to look into whether these acquired companies are actually profitable and well integrated. Sometimes growth can hide problems under the rug. Okay, here's where things get a little less rosy. They had a net loss of $3.6 million. So even though their sales went way up, they still ended up losing money overall this quarter. That could mean their expenses are too high, or maybe the products they are selling aren't profitable enough. We should keep an eye on this because losses can't continue forever without the company getting into trouble. Here we have adjusted EBITDA, which came in at $2.1 million. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's a way of looking at a company's profit without all the extra stuff that can sometimes hide how the business is actually doing. It is a non-GAAP measurement, so it's not as rock solid as standard accounting measures. The adjusted part means they've tweaked the numbers even more, usually to try and show a better picture of the company's performance. So while this number is vastly crafted metric, Upexi is saying they still expect to hit their financial goals for the whole year of 2025 despite the loss this quarter. This is a sign they have confidence in their overall strategy and operations, but it's also something to watch closely. Companies don't always meet their guidance, and sometimes sticking to it can mean taking risks or making short-term decisions that aren't good in the long run. They say they're focusing on growing organically, which means expanding their business by selling more of their own products and services instead of just buying other companies. Organic growth is generally seen as more stable and healthy because it shows the company is actually getting better at what it does. This is good news, but we'll want to see if they can actually pull it off. There's also a point about them buying website properties. So they bought some websites. I guess that means that they have added some new income sources. It depends on how much they paid for the websites because sometimes that turns out to be a bad idea. Let's see what their CEO has to say about all this. The CEO talks about their impressive revenue growth and their focus on profitability, the usual pep talk, and the CFO talks about focusing on driving profitability. Both executives sound upbeat and determined, but remember, it's their job to put a positive spin on things. We need to look past the hype and see what the numbers are really saying. And we've reached the end, now let's step back and take a broader look at Upexi based on what we've seen in this report. The biggest strength seems to be their ability to increase revenue rapidly. Although this growth is largely due to buying other companies, that is not something to brag about. However, they are not making a profit and are actually losing money, so something is off. Their adjusted EBITDA paints a somewhat better picture, but it's not as reliable as standard accounting measures. One of the risks is that Upexi might be growing too fast by acquiring other companies. Integrating these acquisitions, making them profitable, and managing all that debt can be really challenging. If they can't do it well, they could end up with a lot of problems down the road. Another risk is that they are just simply burning money, and that may be a sign that things are going bad behind the curtain. Upexi needs to turn that revenue growth into real profit. It's not enough to just sell more if they're losing money on each sale. They need to show they can manage their costs, improve their profit margins, and make those acquired businesses work together effectively. I personally would be skeptical and would not invest in them right now until they prove they can be profitable, but that is just me. Alright, that's our breakdown of Upexi's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.